Earnings season continues. In fact, we're watching some key names, Lyft and Uber. Let's take a closer look. Matt Oguz is with us, founding partner, Venture Science. Thank you so much for being with us. So you were an initial investor in Lyft. What drove you to say, I'd like to be a part of this, and how has it turned out, in your opinion?
Thank you, Nicole. Thank you for having me on the show. Yeah, we were earlier investors in Lyft. And to get a little bit academic in this, you look at Lyft and Uber, are they in what's called the Bertrand duopoly? And Bertrand duopoly is a concept introduced by the French mathematician Joseph Bertrand. And it essentially says that there are two companies selling the same exact thing. And if you're in that duopoly, then the consumers will ultimately purchase the product sold at a lower price point. So at the time when we got involved in Lyft and built up a position, we felt like Built's product experience was superior than Uber's in several different ways. But after that, we have to also look into the aspect of whether or not they are now in what's called the Nash equilibrium. Of course, we've all seen that a beautiful movie, Beautiful Mind. And the Nash equilibrium basically says that, if these companies are in a Bertrand duopoly, then they will keep running promotions. They will keep running counter promotions until they reach a point where there's no additional economic benefit to be had by doing that. And so, I've written an article about this 4 years ago, and it seems like both companies are still kind of moving along, and we really don't know whether or not they've reached this sort of equilibrium state. But looking at Lyft's numbers now this quarter, particularly with a new CEO on board, David Risher, who comes from Amazon. He was at Amazon its earlier days and, was a key part of the executive team growing revenue numbers there and the whole customer experience aspect of Amazon. Now he's over at Lyft. And I think, he joined in, and the first thing he did is just clean up some house. Essentially, here we can see in their numbers that their overhead had dropped significantly. They cut down $100 million of general administrative expenses, over $100 million of R&D expense. And so, after all that house cleanup, the loss before income taxes this quarter appears to be around 12 million, which that number last year, same quarter, was $421 million. And so that's substantial improvement there. And I think what David's going to do from this point on is really focus on the customer experience and perhaps some product differentiation so that they don't end up in a full-on Bertrand duopoly.
So margins are expanding. That seems to be a good thing. Gross bookings are growing at a slower pace than you would like to see, I'm guessing, based on your notes. Overall, they are both formidable competitors. To your point, it's Lyft and Uber. And when you talk about this Bertrand duopoly and that they will have to keep running promotions until neither of the two are at a true benefit, what needs to change? Because the one good thing about, I don't know if it's a good thing. Is it a good thing for Uber that they have multiple revenue streams? They have Uber, which is ride sharing, which competes with Lyft, but they also have Uber Eats, which saw growth, maybe not as much as DoorDash, but still seeing some nice numbers, and Uber Freight, which is not doing well. Does Lyft need to do something more? Do you want to see them do something more? Would you like to see them just stay right here in the ridership space and, really take out Uber somehow? Be the leader?
I mean, look, if it's the same exact driver, driving the same exact car, and you pull up your apps, ultimately pick whoever is cheaper. So there's really no running away from that Bertrand duopoly situation there. The thing to do is perhaps to expand or try to diversify the offerings. Uber seems to be a little bit more quite a bit more successful in doing that, and perhaps that's what Lyft needs to do. But Lyft cutting these expenses way down is certainly very, very helpful. So from here on out, we're going to see what they would do actually on that same exact rideshare experience. I mean, this is ultimately to the benefit of the consumer. Of course, the consumer gets lower prices in situations where there's inflation, but nonetheless, that these two companies will find it very, very hard to compete on the same exact product. So ultimately, they would have to diversify. They would have to increase their offerings and really keep a focus on the top line growth as well, because many investors, both institutional and retail, are keeping their eyes on the top line growth. So for that revenue growth, Lyft had been sort of flat over the last several quarters, but I feel like this is where David's going to focus next.
Yeah, and so they both have their work cut out from them because, as you noted, this is really the competitive space. I mean, I can't even think. I think there was another one that came in for a short time. What was it, Vivo or something? I don't even remember what it was called. There was a third one that didn't last a day. I say that sort of tongue-in-cheek. You talked about Lyft having opportunity in autonomous. Last I heard, both Lyft and Uber had sort of given up on their research departments for that sort of strategy. Did you get your money back? Are you still invested in Lyft?
We are not invested in Lyft out of our original earlier sort of private level of investing. We've exited out of the IPO positions. But as far as the autonomous driving is concerned, we are investors in a company out of England on that front, but the commercial element of the autonomous driving efforts is perhaps more viable versus self-driving cars today. And so we will see what Lyft and Uber or any other competitor on that front would do. But that's true differentiation right there. I mean, you do that, you're out of Bertrand duopoly, that's for sure.
I don't know. I'm going to have to leave it there. Would you buy Lyft here today at 10.28?
I mean, I think the improvements that they have done to their numbers are substantial. If you improve, your loss before income taxes to the tune of, $400 million something dollars, and the stock price stays sort of stable. I mean, I would be leaning towards building up a position in Lyft today if these numbers are actually true. I mean, I guess they're still unaudited numbers looking at their releases yesterday. But if that's really what happened, that's substantial improvement. So I would buy today.
Look. And to your point, Lyft is balancing its growth and profitability, and it is an incredible player in the rideshare space. And autonomous could bring it great wealth in the future one day, though it feels a little far away. It's great to chat with you, Matt. Come back to the show soon.
Thank you so much.
I like your know-how. Yeah, I like the inside look here at ride sharing. Matt Oguz, Venture Science. Appreciate it.